In the ever-evolving world of finance, one issue that continually raises eyebrows is the problem of bank scams. The global financial landscape has been marred by various forms of fraud, causing significant losses and posing serious risks. In 2023 alone, the scale of financial crime was staggering, with over $3.1 trillion in illicit funds through the global financial system. This included nearly $800 billion in drug trafficking, about $350 billion in human trafficking, and over $11 billion in terrorist financing. Additionally, fraud scams and bank fraud schemes accounted for nearly $500 billion globally. Let's take a moment to consider the evolution of these scams. They've become more sophisticated and, in some cases, more challenging to detect. For instance, there's a rising trend of AI-facilitated fraud techniques. Criminals are now using AI voice generation platforms and deep-fake technology to impersonate identities and commit fraud. As technology advances, it seems, so too does the cunning of those determined to exploit it for illegal activity. Now let's add to the mix a global economic downturn. During periods of economic hardship, the incidence of fraud tends to rise. This includes not only external fraud, but also internal fraud within organizations, with employees potentially engaging in fraudulent activities like invoice fraud and forging expenses to cope with rising costs. But it's not all doom and gloom. The flip side of this technological coin is that the same advancements that facilitate fraud can also be used to prevent it. The development of intelligent systems using AI, machine learning, and biometric verification is gaining momentum. These systems aim to predict potential incidents of money laundering and make due diligence checks more thorough and free from human error. However, technology alone won't solve the problem. Regulatory changes must evolve in response to these emerging forms of money laundering and fraud. This necessitates a continuous update of regulations, requiring firms to devote more time and resources to compliance. The focus on environmental, social, and governance adds another layer, requiring businesses to scrutinize their associates to ensure no indirect involvement in environmental crimes or human rights abuses. The banking system isn't just facing risks from scams and fraud. There are also significant regulatory and business risks. For example, compliance with certain provisions of the Dodd-Frank Act and the Community Reinvestment Act poses challenges for banks in pricing risks and competing with non-bank credit providers. Additionally, the Basel III Endgame proposal, which is set to alter the approach of banks with over $100 billion or more of assets towards risk-based regulatory capital and capital management, will likely increase banks' risk-weighted assets, requiring smaller ones to enhance their risk data and technology capabilities and controls. Interest rate risk is another significant concern, with recent volatility and higher rates increasing deposit costs and squeezing bank margins. This, coupled with the higher cost of deposits, poses considerable business risks. Credit issues are also emerging, with signs of deterioration in loans and increasing delinquencies, particularly in certain sectors like commercial real estate. This brings us to the potential solution: decentralized finance, otherwise known as DeFi. In the face of these challenges, DeFi offers a promising alternative. As we move forward, DeFi could revolutionize the banking system. It could provide new ways of conducting financial transactions that are more transparent, efficient, and inclusive. It could also reduce the power of traditional financial institutions and democratize access to financial services. Financial experts are starting to recognize the potential of DeFi. They see it as a tool that could help tackle the issue of bank scams. By leveraging blockchain technology, DeFi can provide a more secure and transparent platform for financial transactions. It's not a magic bullet, but it's a step in the right direction. The future of DeFi looks promising. As technology continues to advance and regulations evolve to support this new form of finance, we could see a significant shift in the way we manage and use money. It's an exciting time to be involved in finance, and we're looking forward to seeing how DeFi develops and transforms the banking system.